When you need a mortgage, don't stress at all. Just tune right in and give these guys.
Good morning, YouTube. Today is Tuesday, May 13th. Holy cow, it's the middle of May. I can't even believe that date. What is going on?
What's up, fellas?
Whew, I can't believe it's middle of May either. The time is flying. The weather just seems like it rains every day up here too.
Yeah, grass cutting season is live, huh?
Yeah, I had to get it cut yesterday afternoon. I'm cutting it every 5 days. I probably should be cutting it every 3 days. The amount of time it takes to get through that is just insane. It's live. Grass cutting season is live.
I know, Ant, you were doing a little bit of that this week too.
Yeah, man. I do my dad's, I do mine. It's a full day. It's a full day event. So no pre-approvals while I'm on the lawnmower. It's dangerous.
Absolutely. But today, fellas, we're really seeing a change in the market. So we're here to kind of update everyone, because I feel like the question we get all the time is, how the heck can I get the best interest rate? And frankly, sometimes the way to get the best interest rate is to get the best loan program. And the way to get the best loan program is to listen to the loan expert, because there are way more four types of loans out there than just conventional loans. Conventional is only 1/4 of the type of mortgage you can receive, but sometimes on the real estate side, it seems like that's the only option. And frankly, guys, not every buyer is a conventional loan best for them, or else these other type of loans wouldn't have been invented.
Yeah, 100%. You're not wrong with saying any of that.
So I think that's we're 5 years now from COVID, Anthony. I can't believe we're saying that, but we're 5 years from COVID. It was a seller's market in COVID. We get it. You had to come in best foot forward, multiple offers, figuring life out. But it is a different market out there in some cases.
Yeah, I mean, it's definitely a different market than it was during COVID. And there's a lot of people that still think that we're in the COVID days, and they're waiting for rates to drop. Like you said, finding the best interest rates, it's not as easy as just calling, 3 banks saying, hey, what's your rate right now? Working with a great loan officer who's going to help you structure that and provide options is going to benefit you so much more, because a lot of people don't read the fine print. We all have the access to go on to any of these online banks or whatever to see what their interest rates are. Nobody looks at the fine print, and then everybody's upset afterwards when they get their actual loan estimate and it's showing 2 or 3 points that they never knew they were getting. So working with a solid team like one of us on the screen, who's going to provide those options and actually structure that deal around the client's needs and not just tell you what you want to hear.
And if you're a real estate agent working with one of us, telling and explaining to your client, our client, that we are going to work with you to get you the best loan program and the best interest rate. Whatever Ryan, Tom, or Anthony tell me the best program is, I'm then going and get you the best offer for the home that you find that you want. You're not going to pigeonhole a buyer and say, I'm only going to work with you if you do a conventional loan, because that's crazy in some cases. Not everyone has the funds that makes a conventional loan best for them, and not everyone has a credit score that makes a conventional loan best for them.
There's a girl in one of my offices who is now dubbing herself the FHA expert, and she's telling other agents that, hey, if you don't want to deal with an FHA buyer, I'll gladly take them and get them a deal. She is the FHA expert, and she's taking people's clients that don't want to help people get an FHA loan.
I mean, Tom, agents that act like FHA loans are the devil are hilarious to me. They are a great loan program, and those agents are just costing themselves money. So, hey, if you're out there, you're an agent, you want to work with all buyers, I think that would behoove you, and you should want to be taking FHA buyers. But the biggest thing with FHA in any loan program can be credit scores. Of course, we want every buyer to have an 800 credit score. Unfortunately, that's not reality. But we want everyone to have an option to buy a home. So if you don't have an 800 credit score, there's other options out there. And the other options are beneficial because of how they are structured. For example, I did a 700 credit score, $300,000 purchase price with minimum down payments this morning. All right. And if you want to pull up the interest rates first, okay, these are West Penn Financial interest rates that we send out to our loan partners, our real estate partners, twice a day. Last night, 6:07, these came out. Conventional, we're 6.75 with no points. That's 6.852 APR. 6.75 for a conventional, no points. Okay. FHA, where you're not going to get dinged if you have a lower credit score. Let's go down. 6.25, 6.901 APR. So let's get into this. All right. That's going to be about a $95 a month savings in interest rate if you go FHA over conventional. Then on top of that, this is one thing that's always forgotten about, Tom, is mortgage insurance. FHA has a set mortgage insurance rate. Conventional's mortgage insurance is based off of credit score. Lower the credit score, more the mortgage insurance.
A lot of the time I do see, as we dip down in 700, don't get me wrong, 700 is not a bad credit score. But as we start to dip down to that mid-tier credit around 700, we start to see that crossover between the set mortgage insurance and the conventional mortgage insurance for minimum down. Now, as you put more down on a conventional loan, that rate will be less, but we're talking strictly for the minimum down 3.5% to 5% or 3.5% versus the 3% on conventional. Once we cross that 720 threshold, typically we see higher mortgage insurance on the conventional loan.
Yeah, I mean, for the 700 credit score, it can be about $100 more a month for mortgage insurance. And everyone's like, well, I don't want to go FHA because it's life alone. But listen, guys, don't worry about that. A lot of folks, someone will say, hey, starter home, I'm not going to be here long, but I don't want to go FHA because the mortgage insurance is for the life of the loan. Guys, you just told us you're only going to have this mortgage for 5 to 8 years. You're not even going to make it to the point that your mortgage insurance would have fallen off. So you're worrying about something that doesn't exist for your scenario. So you could save close to $200 a month going FHA over conventional. So if someone needs to explain to me for that buyer how a conventional loan is better for them over FHA just because the appraisal is a little bit more strict and the home may not even have any FHA conditions on the appraisal.
Yeah, it's a tough situation to come into. I mean, the FHA loan's a great loan. It's almost better than the conventional loan in some aspects. Cheaper for the buyer, certainly on certain times. But it's a shame because listing agents literally will put their foot down, shut you out of the door, almost a fair housing crisis.
Not almost.
Almost, not quite, but it is a fair housing crisis because these listing agents will not accept those offers because they sit on that pedestal.
Yeah, Ant, I'm not sure. Again, we're not lawyers, we're going to give our own opinion, but I'm really not sure how you can openly say as a listing agent, you're not going to accept a type of loan. That seems like I would not do that if I was a listing agent, but we see it every day. So heck, I guess no one's out there watching, but that seems a little sketch to me.
I mean, in my own opinion, based on our our classes and everything we have to go through, that definitely would seem like a fair housing issue. Anytime you're choosing a specific product for somebody that to accept the offer based on a specific product, person, race, creek, whatever it may be. I mean, it all falls into the same category, man. But I mean, if the offer is truly better and the seller is going to net more, then I can understand, but if you would have a government insured loan that is better in offer versus the conventional, but you took the conventional instead because it was a conventional, I mean, it's a slippery slope. It's kind of crazy.
Definitely an ethical issue. I think there was ethics classes going on this past month, so definitely an ethical issue. For sure. And it's crazy. That's like sometimes listing agents can't even tell you why they won't take the FHA. It's just this mythical creature that everyone's afraid of, but no one knows why. And it's hilarious.
There's no steps on the porch. We don't want to do that.
Yeah. I mean, listen, FHA looks at health and safety. For buyers, you want a property that's safe for health and safety. So as a buyer, you should be thankful that FHA is a little bit more strict with that appraisal. And generally, it's handyman stuff, less than $1,000 for a cost to cure. Nothing that should kill a transaction if you're buying or selling a house. So let's keep the market going. Let's accept government insured loans. They are great programs, and stop with this craziness of conventional loans only, because it's stupid and it's wrong.
Yeah. And if somebody's listing a property, just inform the seller of the minor things that may come up, do them in advance, and then you can get the best offer regardless of the program. The program's going to benefit the buyer in financing. Do that work in advance so you don't have those worries.
And we're not economists, but simple supply and demand would state you should want as many offers as possible on your property, and you should not be limiting. As an agent, you should find out every type of loan as possible. Is it USDA eligible? Is it in an area for grants? Can there be closing cost assistance? All kinds of things that we can help you sell the house. Give us a call. We want to be part of that listing process, because there's a lot of information that can help buyers. And we're so far from a conventional only market. We need to get everyone out of that headspace.
What did you say down in Atlanta? What, 70%, 75%?
I think it was, I think it was 50%. There was a big article down here that Atlanta has turned to a buyer's market, that 50% of buyers are now getting seller concessions, which, wow, we've only been talking about that for about a year and a half, that was coming. Of course, we saw it coming. Do not be afraid as a buyer to ask for what you're allowed to ask for. And if you don't know what you're allowed to ask for, you could just be leaving literal thousands of dollars out there. And that's why you need to work with a good team.
Agreed.
Solid.
All right, fellas, we'll enjoy that warm weather, and we'll catch you Friday. Don't forget, June 6th, June 6th, June 6th, June 6th, June 6th, 12 to 5 hole-in-one contest. Shooters golf, $1 a shot. Tommy can't win because he's an employee, so you guys have a chance. See you there.
See you guys.
Get it from us. It doesn't matter.
Later.
See you guys.
Tom, Ryan, and